We gained over 300%, hitting max profit as our options just expired on our FTAI Aviation trade. And the best part? This winning trade came straight from unusual option activity we detected from a wealthy investor, the kind of person who probably flies private jets, while the rest of us are just trying to get a decent seat on commercial. So in this video, we'll briefly review this trade so we can learn how the rich keep getting richer and how you can also hit max profit. If you've been following our work or subscribed to our channel, you'll know that on this day, July 9th, when the stock was trading around $110 per share, we shared an unusual trade placed by a wealthy investor. This was the video that we posted on our channel about 1 month ago before earnings were released. We analyzed a $59 million options trade to help determine whether to buy or sell FTAI Aviation stock before earnings. And after analyzing the data, it was clearly flashing a buy signal, indicating a potential stock rally. So we entered our bullish trade based on our analysis. And as it turns out, that analysis was correct and highly profitable because FTAI Aviation stock soared after earnings and is now trading much higher at $144 per share. So that trade has paid off big. If you want to learn how we predicted this stock rally, we'll link this video at the top. Make sure to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, how much profit did we actually make from this trade? Well, if we had simply bought the stock by using shares, we'd be looking at a solid 30% gain. And notice how the stock is still trading at the same price level right after the earnings rally. This was actually very favorable for our options strategy because the extra time, or theta in options terms, is what allowed us to hit max profit. And since we used call options instead of just buying shares, our profits were even higher, thanks to the leverage that options provide to amplify returns, capturing even bigger gains. So, what was our return on investment? Well, let's take a look at our original analysis using the risk profile graph, focusing on those August 15th options at the 120 and 135 strike calls, a vertical call spread priced at 3.38 per contract when we entered this trade. And remember, this shows option prices, so we either move the decimal 2 places to the right or multiply by 100, since each option contract controls 100 shares of stock. That means each option contract costs $338. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis shows the amount of profit or loss. Keep in mind, this graph already factors in the cost of the trade. That's why you can see on the blue line that if the stock had dropped down, it would have been a negative $338 loss per contract. But instead, it went up to about here. So we have a profit of $1,117 per contract. This is essentially the max profit because with the stock now trading at $144 per share, both of our call options at the 120 and 135 strike prices are deep in the money. And so to calculate the profit percentage, we take the profit of $1,117 and divide it by the initial cost of $338 and then multiply by 100 to express it as a percentage, and that gives us a return of 330% profit. And remember, the stock itself only gained about 30%. But by using options instead of just buying shares, we turned that into over 300% profit. That's 10x the stock's move. That's the power of options. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. So if you want to get access to more of these deep insights from the rich, then just head over to our website. We'll put a link up here. Of course, no one wins on every trade, But just one of these winning trades like this can offset several losing trades and drive long-term growth, making a significant impact on our overall net profitability. For example, we could lose 3 trades in a row at 100% loss each and still be up, positive by a 30% net gain, thanks to just one winning trade like this. Now, if you've been following our work, you know that we do not lose that many times in a row. In fact, it's usually the opposite because we win a lot more trades. But the point is this: too many people obsess over win-loss ratios. What really matters isn't how often you win, it's how much you make when you do win. Maximizing gains on winning trades has a far bigger impact on your bottom line than chasing a perfect win rate. That's the edge we focus on, hitting max profit on our trades, just like this wealthy investor did as well. If we look back at their trade, the one we originally analyzed to enter our trade, you'll notice it was structured slightly differently than ours. They sold the 95 strike puts, which required much more capital per contract, the kind of trade only wealthy investors with deep pockets can afford to make. But the key takeaway is the same. Just like ours, their trade also hit max profit, as you can see on the blue line here. And so, if you missed our previous video analyzing this wealthy investor's trade from this day, we'll link that video here so you can see exactly how we first got into this trade, which ended up making 330% profit. For deeper access to our strategies, visit our website. We'll link it here. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.